Hello and welcome. This is Business Time, a magazine program where we bring you business and economic news stories making headlines in the country. My name is Chimwemwe Mangazi. Coming up in the program today, Malawi could lose 1% of GDP to transfer pricing. Also in the program, manufacturing companies start to invest in businesses amid calamities from COVID-19. We have these and other stories. Stay tuned. In our main story today, Malawi could lose 1% of GDP to transfer pricing. This is contained in a study that a local researcher and economic expert, Donatius Patera, has conducted. We are joined by Patera to hear more about the findings of his study. Thank you very much for speaking to us, Mr. Patera. In the first place, tell us, what is the situation as regards transfer pricing in Malawi?
Transfer pricing, as per se, it is a good thing because this is an internationally recognized way of doing business by multinational companies. However, some multinational companies, not all in Malawi, they are doing what you call transfer mispricing. They are doing deliberately putting some figures or trying to play some figures in order to reduce the tax that they are supposed to pay in Malawi, and also then externalizing the funds. When I was conducting this study, I looked at 30 countries, and it was very pathetic to look at the situation that Malawi has. That when I made the calculations, Malawi would lose almost 1% of the GDP to transfer mispricing. This is just an financial flow that we are going to experience this year. So this is what I've observed, and it's a very pathetic situation.
You mentioned that you looked at 30 countries, including Malawi, on the continent. How is Malawi faring when we compare to the other countries that were involved in the study?
Malawi came from the 30 countries. Malawi came, like I say, it was on number 15. But if you look at now our GDP, if you compare with other countries, you'll see that 1% of GDP loss is a very big loss to a country like Malawi. And we came after Kenya, and when you look at the GDP of Kenya, is better. Now, when I looked at the amount that we are going to lose, the amount of revenue that we are going to lose, is a very big sum of money that can help us change the situation that we have in Malawi, including the public services, and we've got so many situations that challenges in Malawi that we need to. So that's a lot of money when I translate it into what can it interpret into the public service.
I understand there are a number of ways in which transfer pricing occurs. What are the common ways that multinational companies are doing this in Malawi?
All right. Most of the times, what they do is they shift the profits. They say, okay, they can tell you, okay, we have got these administrative costs that have occurred. Maybe they can bring people like experts. They say we have paid experts from a sister company. While they haven't done that, so what they do is all these costs, these administrative costs, can be shifted somewhere else. So what they do is when they are shifting those administrative costs to a certain country, that means they are taking the revenue from this country, from Malawi, to another country. So it's like they will put all the things that are acceptable to be deducted in tax. So when you like I say, they remit to the institution that is responsible for the collection of tax. So usually they will say, okay, these are the right things that they are supposed to deduct. But in real sense, what they've done is that they're just shifting the profits to another country. So in real sense, what they declare just a little sum of money to, like I said, to the revenue authority, so that the money that the tax that they're going to pay will be later. So in this situation, what we have just observed, there are some countries like in Africa that are emerging, like Mauritius and Gambia. They are now also facing the very same problems. They were at least better countries, but now they are facing the very same problems. So it's a situation that that is very pathetic. And last year also I conducted a very similar study, and I still remember there was one country that contacted me, and I also gave them the details. I think they have improved and greatly this year.
Now, what can Malawi do to reverse the situation? Where can we start from?
It's a very complicated thing. Transfer pricing is a very complicated thing, and we need to invest in this field by training a lot of people in transfer pricing and also financial intelligence. Lucky enough, for me, when I started transfer pricing only, I did not have much knowledge on how I can get these figures right. But when I did financial intelligence somewhere else, when I combined these ideas, they helped me a lot in just tracking these financial, like I say, these multinational companies. So that's why I'm able to, like I say, to do this analysis because I get data from reputable international institutions where they show the trend of multinational companies. So what I can say here is we need to invest, like I say, train a lot of people in transfer pricing and also financial intelligence. And this investment should be, like I say, should be highly prioritized. Otherwise, we are going to lose a lot of money. In Malawi, I don't think we have a lot of people who are experts in transfer pricing. I don't think so. But if there are some people who are doing this transfer pricing, I think what you need to do is now to increase their capacity in understanding the new ways, because things are changing every day. So multinational companies, their skills or their ways of stealing money or revenue from African countries is changing. So we need also to up our game, refresher courses for those who have done transfer pricing, and also we can also have a school of taxation, proper school of taxation, where they can also just be experts in transfer pricing and financial intelligence.
Well, thank you very much for speaking to us in this program.
Thank you very much.
Mr. Patera is a researcher and economic expert, and this is coming against the background that the Malawi Revenue Authority is pursuing cases of transfer pricing amounting to 50 billion kwacha. They made the revelations last year when the Minister of Finance, Felix Mlusu, visited their head office in Blantyre. Players in the financial sector listed on the Malawi Stock Exchange are thriving despite challenges posed by COVID-19. This is reflected in a corporate news report published by the Malawi Stock Exchange that has shown that commercial banks listed on the market are going to post between 20% to 200% of their profits made in 2019. Justin Kwel has more in this report.
A corporate news report released by Malawi Stock Exchange has shown that FMB Capital Holdings PLC will post a 200% profit increase, while NBS Bank PLC 25% and National Bank of Malawi PLC expects a profit increase of more than 20%. Standard Bank expects a 45% increase in profits, while FTH Bank has declared a 3 billion kwacha dividend payment. However, despite Airtel Malawi PLC expecting 40% increase in profit, its competitor TNM PLC expects a 25% subdued profit for the year. In the hospitality sector, Blantyre Hotels PLC expects a 200% dip in losses, while Sunbelt Tourism PLC expects a 150% loss. Research manager at Capital Alliance Limited, Bond Mtembezega, said banks in the country stand the test of economic calamities. He said that at the peak of the pandemic in 2020, most banks relied on digital and remote banking channels, which enhanced service provision and reduced costs on the operations. He added that Malawian banks are generally resilient, firstly because of stringent standards set by Reserve Bank of Malawi, RBM, that is, adequate capital requirements and constant off-site and on-site monitoring. Speaking in an area interview, Malawi Stock Exchange Chief Executive Officer John Kamanga attributed the mixed performance to the COVID-19 pandemic, political instability, and listing of new companies on the market. He indicated that some of the counters were heavily affected, especially the hospitality industry, and some counters saw the price going down. So as the result of that, investors increased their sales but at a lower price. But the market also saw some counters thriving, such as those in the banking industry and the telecommunications industry.
Those who are selling, they are adamant in terms of selling at a lower price. As a result of that, they were actually trying to push it at a higher price, and therefore the price gain in Airtel is much higher than the price gain in NBS.
COVID-19 pandemic has knocked economies and businesses staggering on their knees as it disturbed trade patterns both locally and internationally.
Members of Parliament passed the mid-year budget after a thorough review last week. Our reporter Justin Kweu took time to analyze the content of the new budget and how it is going to bring change to implementation of the same.
Those for the benefit say no.
Economist Chereni said having revised the budget, it means that it is now in line with the realities of economic situations in the country. He, however, expressed worry with the projected 564.4 billion kwacha domestic borrowing out of the 810.7 billion kwacha deficit.
It's something that we have been complaining, many economists have been complaining, and it has not been the economists only, but many people have been complaining about it. By the time, if we are not going to service the debt as it is now, you will realize that our total debt might end up being somewhere around maybe 5 trillion kwacha, or even above the 5 trillion. So that is quite concerning to us. And the way we are going to finance the budget is actually more concerning than anything else, because if we are going to borrow too much from the domestic market, chances are that we are going to distort the financial market, and we are going to be in a situation where financial the macroeconomic fundamentals are going to be disturbed, and that we don't want to see happening.
The budget was passed without changes from the one initially presented by the Minister of Finance, Felix Mulusu. Even though this is so, Parliamentary Budget and Finance Committee Chairperson Gladys Ganda expressed happiness with it. Ganda said that the deliberations have shaped it, especially in the Ministry of Local Government.
In terms of deliberations, we've had a good discussion. Only that on one item from the Ministry of Local Government, members of Parliament did raise a few number of issues pertaining to the Houses of Chiefs that we need to make sure that it's budgeted for.
Mlusu said he would take into account the input which the members of Parliament gave in the budget.
Some of the measures that we have taken, these will be rolling out and will be informing the public as we go along. One of the things that I think I mentioned here and I announced was the liberalization of exports of our produce.
Recurrent expenditure during the first half amounted to 830.1 billion kwacha, falling short of its target at 892.6 billion kwacha, representing a 7.0% underspending. Development spending during the first half of the year overperformed by 86.4 billion kwacha, with 83.7 billion kwacha emanating from foreign financed component and 2.7 billion kwacha from the domestically financed component. The overall balance during the first half of the year was recorded at negative 351.0 billion kwacha, slightly above the planned first half deficit of 348.3 billion kwacha due to more than projected disbursement of project loans, according to Mlusu. This is the first full budget for the Tonse Alliance-led government.
Despite complaints from players in the manufacturing industry that business has slowed due to COVID-19, some have started reinvesting in their businesses. One such company is Chibuku Products Limited, who recently revealed that they have invested $500,000 in their plants in Blantyre and Lilongwe. We engaged the company's corporate affairs and business development manager, Gloria Zimba.
As we said in our last interview at the end of last year as well as the beginning of this year, that Chibuku is still looking at expanding and making more investments despite the difficult business environment. And indeed, true to our word, we have made 3 big investments this year for Blantyre Brewery as well as Lilongwe Brewery. For Blantyre Brewery, we have introduced a new variant of Maheu, which is Top 1 Shake and Sip. The machine is the machine that you see right behind me is Top 1 Shake and Sip. It's more or less like a yogurt, which is a different variant from our Super Maheu. Super Maheu is just an improved version of our traditional porridge added with milk and other flavors. So this Top 1 Shake and Sip is in a carton. We have started with 500 mils. In 3 flavors. So we've started with the strawberry and milk, there's chocolate and milk, and then vanilla and milk. But we'll be introducing other flavors as we go along. The Chibagi product, we've also made an investment. There's a new machine that has come in. It's called a guard machine. Other people call it a Gaudi machine. It's faster, it's safer to use for our employees. We've invested in that machine to improve our efficiency. It's a project that has been done in conjunction with NAMPAG Limited. So we are improving our efficiency, our throughput per hour. We just want to improve our throughput per hour, but also enhance on safety, since every production organization, every day you look at continuous improvement. So we are looking at how can we improve better on the safety of our employees. So there we've also spent about $50,000 on those machines. The machine that is behind us is also another $120,000. There's another Jive machine, another product that we've introduced. It's a spirit cooler. We've introduced 3 flavors. There's brandy cola, there's vodka lime, as well as vodka orange. So we have just started in 20-liter decanters. We've already introduced the product in the market. A few selected bars, we are running a trial, but our plan is that probably in April, we are going to do a proper launch, having received the feedback from our consumers on the success and acceptability of that product. It's a spirit cooler. We are targeting the young millennials, giving them also a variant that is totally different from the sorghum beer. So that machine has costed us, we are going to have a machine in Blantyre, a machine in Lilongwe, and a machine in Mzuzu. So the total cost of that product is around $300,000, the total investment. That is for the machines, as well as the technical expertise and other accessories that go in there. It's a sacrifice which Chibuku has made for the sake of our consumers, for the sake of Malawi, and for the sake of being a partner in development, partnering with the government in development. But as I said earlier, we are just looking at what the consumers want, what they are demanding, and the changes in the market dynamics. So we can't remain static when the consumer wants something a bit different. And also, with the ages, you differ according to the ages, what you demand and what you want. So we want the traditional consumers who still have their carton, which they famously call Chibagi. They will still have their traditional Super Maheu. But for the young millennials, they want something a bit different, something that resonates with what they want and they enjoy taking. And it's true, business is very slow. It's a very difficult operating environment. Apart from COVID-19 challenges, there are also smuggling challenges. But we are positively looking into the future. As we continue to engage the government, we believe that we are going to be able to strike a win-win situation where there is on some of the issues that we complain about, like issues like taxation, excise duty. If they consider and ease us on us as a business community, especially the manufacturing sector, we'll be able to compete with the products that are being smuggled into the country. That's our plea. And our plea to the regulators, Malawi Bureau of Standards, as well as Malawi Revenue Authority, to step up the regulation and enforcement of the laws that are there that protect the local product. Because without that protection, we will not survive. All the investments that we are making is just going to go in vain. But we are making all these investments as a sacrifice, and we are willing to take that challenge as well as that risk, believing and trusting that our partners, Malawi government, the Treasury, Ministry of Trade, MRA, they also consider us because of the investments that we are making, and give us some excise break so that we make some profit and survive.
With that item, we've come to the end of today's edition of Business Time. It is a magazine program where we bring you economic and business news stories making headlines. My name is Chimwemwe Mangazi. Always remember, if it doesn't make money, it doesn't make sense. Bye for now.